This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
All right, Casey Boland time. Casey stands by. He's with Hanghold Capital Management. And Casey, you're talking about a recent Barron's article. Kind of pointed out how the market is more volatile, and they're thinking maybe in response to the rise in popularity of, say, a Bernie Sanders and a Donald Trump.
Well,
right?
It could be true. Well, it might be. Or is it coincidence? I don't know. But historically speaking, the market has tended to be volatile in an election year until it appeared to be known who the likely candidate was to win. So this is not something new. This is a very common trend that you've seen in election years. But regardless of who gets elected, you will start to see lots of speculation about which sectors will perform better depending on which party takes over control after the election. I wish it were that simple.
Yeah, back in 92, of course, Bill Clinton was talking about overhauling the U.S. healthcare system, so that made the pharmaceutical world kind of jittery. In fact, it cost him, did it not?
It did for a period of time, but the overhaul never happened. And by the end of Clinton's presidency, the big pharma name surged and outpaced the stock market, in some cases by 2 to 4 times the performance of the S&P 500. And when you saw the second term come up for Clinton in 96, many pointed to the historical trend that small cap stocks usually fare better under Democratic administration and bigger stocks under Republicans. Well, as we know, Clinton was reelected, and from 96 to 2000, small caps rose 54%, while large company stocks jumped 130%.
And then George Bush getting elected in 2000 was supposed to be good for banks, but by the time he was out of office, what?
The bank index got killed. and then during 2008 election, many predicted that Obama victory would be negative for banks because of more regulation. In fact, banks are up more than 100% to 200% more since then. So, I wish it were that easy. If A happens, well, then this investment is a can't miss. It usually never happens that way. So keep it simple. Buy good companies, don't overpay for them, and hold them for the long time. There are no shortcuts.